How is everybody? Afternoon, Mark. Afternoon, Neo. Afternoon, Evil. How are we doing? Excuse the hat. It's Christmas. Christmas jumper is on. Fully in Christmas mode. Last day. Christmas starts today, as far as I'm concerned. So, yeah, fully Christmased up. I hope you've all got your Christmas jumpers on. I expect to see lots of pictures in Discord about them. Thank you. Right. So, today we're going to go through yesterday's FOMC, have a look at the fallout from that. Have a look at the Bank of Japan interest rate decision and see what that's done. And then basically in half an hour, we have the Bank of England rate announcement, which is forecast to stay as it is. Afternoon, Callum. Morning even. Guys, morning. Weird. So we're going to watch that unfold, have a look at what happens to the pound. And then this afternoon, we've got unemployment claims and GDP as well. So there's more news this afternoon, but that's pretty much it. We've got CAD retail tomorrow and pound retail and PCE, but should be quiet tomorrow, but we'll see. You never know. So kicking off with obviously what happened yesterday, FOMC, we did drop the rates down to 4.5 as forecast, which is what we were expecting. The market obviously reaction yesterday, if I find Euro US, obviously was a massive bull move on the US dollar. So we basically put in 140 pips, so 200 ADR pretty much on Euro US dollar. If you look at all the US dollar pairs, basically it's the same story. Massive movement on US. So big strong move everywhere off the back of that news. As you can see today, a lot of it is unraveling because the result that we got was exactly what we were expecting. So obviously yen's a little bit different today, but yeah, there was absolutely no reason for that at all. So complete knee-jerk reaction. So mean reverting the lot, basically. Afternoon, monkey. Morning, even. So yeah, lots of mean reversion opportunities yesterday. ADRs, RSIs, anything you got into basically on the US dollar yesterday on an extension of any kind, be it RSI or the ADR, all played out. So it was a non-event basically. So if we have a look at the actual events unfolding and what it means, interest rate decision came out at 4.5. Median forecast 3.3. Previous 3. Forecast was 3.1. So basically everything came out pretty much as expected at the end of the day. That is the Fed projections. So 50 basis points of cuts in 2025, another 50 in 2026. So what they are basically forecasting is very much like the UK, and we're going to find out today in about half an hour what's happening there, but unlikely that we're going to be able to move that rate very much in the US. So if we look at obviously where we are, 4.5%, we're at 4.75 in the UK, 0.5%, so down to 4.0, maybe a little bit more by the end of next year. The pound might get down to 4.5, 4.25 by the end of the next year. Inflation is sticky. Everything is still going up. So what they're basically saying is that interest rates are going to remain high for the foreseeable future, for the next year, in theory. So we shouldn't see too many rate cuts coming. Policymakers see 4.3% unemployment rate at the end of 2025 versus 4.4 in September projections. So they're not forecasting the unemployment rate to change very much either. So really what they're saying is we're in a bit of a tricky situation. We can't see a way out of it next year. So that's why we had the rally on the US. The market seems to read into that we're definitely not going to weaken. But we're not going to strengthen either, which is why we're getting this knee-jerk reaction today, because it's not going to weaken, but it's not going to strengthen necessarily either. So it doesn't mean anything really, the news that we got yesterday. GDP growth at 2.1% in 2025 versus 2. So everything was basically pretty much as we were expecting. US rate futures pricing more than a 90% chance that the Fed will hold rates at the January meeting. So we're now basically saying there's a high probability nothing's going to change. The dot plot there. So this dot plot basically is the forecasts basically. So this is 2024, 25, 26, 27 long term. So as you can see, this here is about 2.5% roughly. This big long line here is 4%, just under. So this is where they reckon we're going to land next year. This is the variance. If you think about bell curves, any members in here, we discussed bell curves in the members streams when we're doing testing. This dot plot is basically the equivalent of a bell curve. So what it's basically saying is this is where we have a 60 to 80% probability that we will end up, but there is a slim chance it might be here, and there's a slim chance it might be here, but the majority believe that that is where we're going to be. Yeah, and this is what the dot plots are. The further into the future you go, the less reliable that data becomes. So the thinner it gets and the more spread out it becomes. So that's where we're ending. Obviously we know that because that's where we are, but they really have got no faith in dropping anywhere significant over the next 12 months. So for the US, it means moving forward, it's going to be based on economics. So if unemployment suddenly starts to escalate dramatically, they may need to drop those rates. If the GDP starts to collapse because Trump's put too many tariffs on, they may need to drop those rates to encourage more borrowing and things. So it's just at the moment, it's a nothing, basically, what they're saying. So we're not expecting any movement. 2 cuts in 2025 at a quarter point each. Yeah. But apart from that, there wasn't a lot else in Powell's speech that was bullish or bearish. It was more super cautious, stick where we are type stuff. So housing services are steadily coming down. Everything is just ambling along is basically the overall underlying sentiment from yesterday. So yeah, that was pretty much it. So from a rate perspective, we've got that over the next 12 months. So nothing. They're not saying we reckon inflation is going to drop below 2%. We're going to have to get that down below 4%. We'll be down below 3% within the next 12 months or anything. There's nothing in that speech yesterday that said anything massively bullish or massively bearish. So that's pretty much it. Then we had the New Zealand GDP coming out. Massive miss on GDP. New Zealand dollar, you can't really see. Let's choose New Zealand Swiss. So New Zealand dollar, huge drop on that GDP number. So I've got in a long on New Zealand dollar Swiss, big extension. Euro Swiss has just hit its weekly range as well. We'll look at the ADRs in a minute. So yeah, big drop on the New Zealand dollar. Another massive miss, more expected weakness in New Zealand. And then we moved into the Japanese rates this morning. So Japan decided to keep the rates at 0.25. There was one vote against the rates being at 0.25 and wanting to change them to 0.5, which was Tamura. So we are getting to the point where they are starting to think about upping the rates more. FX volatility could have a greater impact on inflation. So what they're saying is if you keep devaluing our yen, we are going to have a problem with inflation, which means we're going to change our rates, which also means we might intervene. So I said this morning in the Discord group, there's a chance that there will be another intervention now. So if we look at the US dollar yen, obviously ADRs today, you can see across the board on the yen pairs, 175, 225 plus, this thing's gone parabolic. So we had that massive spike off the US dollar yesterday. And then this morning we've had over 200 ADR on virtually all the yen pairs, meaning that we are now approaching intervention again. So this is the intervention level. This is the level the Bank of Japan warned intervention initially. Yeah, 150, 152. That's where we say, oi, this is getting ridiculous now. If you keep pushing, we can't trade with you anymore. We spiked all the way up to the 160 level, another $10, and then they pressed the button. Yeah, so I said before, watch what happens when we get back to this level. We're likely to weaken. We didn't. We just flew straight through it. Looked like it was a 71.9 retracement, and we were starting to stabilize. But today, we've broken back above last month's high. So the Bank of Japan, from now on, are going to be saying, guys, we can't do this anymore. We're going to need to press the button again. The problem is we don't know if the Bank of Japan has enough overseas assets to liquidate to cause this. They sold them all here. So we know that they've been dropping the bond buying in the US, which means that they haven't got any bonds to sell. So if you want to power your currency up by turning your US bonds into Japanese yen, you press the button. If you haven't been buying any, you haven't got a button to press. So what happens from here? Don't know. We've never been here before. This is brand new. We've never been at this point with interest rates rising in the Japanese yen and them not having overseas assets to liquidate. So is there a possibility of an intervention? Who knows? So this is a carry trade. We know it's a carry trade. It's always been positive swaps. It's still positive swaps. The banks continuously buy it because, or rather they sell the yen because they make money by holding everything against the yen. Then nothing's changing. So I can't see any reason for this to not come and test that high from here. Whether it gets like that, I don't know. It's more likely to just grind gradually like we've done in the past. But any news event that is positive for the US is going to drive this over ADR. And if you look at where we are now to the intervention point, which was there, we are 477 away, which is 130, 260, 390, about 3.5 ADR. We can be there within a week. So very dangerous situation at the moment with these yen pairs. If you are long, that's what you want to be. You're being paid to go long. But if you are long, there is a possibility they can do that at any point. So just be wary. I'm sticking clear of the yens still. I just really have not got any confidence in any direction on this. It's totally random at the minute what it's doing. But things like that, yeah, I wouldn't want to do anything but long the thing at the moment. So any kind of pullback for longs is really the only plays on them. But if you're going to trade it, do not try and position trade it. Use a stop loss. Yeah. Make sure you've got an out, because if they press that button, you want to be out, because if you saw what happened last time they pressed the button, you're not getting out for a long time. Yeah, a month you'll be stuck in it, and it won't be a normal month's worth of movement, which is that kind of distance on a good month, that kind of distance on a sad month. It's going to be that kind of distance. Yeah, you won't survive it. So not position trading instrument at the minute. So yeah, we'll see what happens with that. But obviously they changed the rates. Well, they haven't changed the rates, rather. They are now thinking we should have changed the rates, or we are planning to change the rates. They're expecting CPI to increase. So as inflation goes up, you need to increase your rates to keep inflation under control. So they're forecasting inflationary risk, which means they need to up the rates, which is why one of the members said, we think we should have gone to half. So bullish, basically, yen against the yen at the moment, because they're not doing what potentially they should need to do, which is increase interest rates. So we'll have to just keep a close eye on it, but watch this every day, every morning. Check the news feed, watch for them talking about intervention. If there is any mention of intervention, you know it's potentially coming. If it's coming, you do not want to be too exposed long against it, because if they do it, you're stuffed. Pay attention to financial and FX markets, blah, blah, blah. So it's just, you know, they're constantly watching this. Don't forget, Japan are a massive exporter of goods everywhere, specifically to the US. If the US dollar yen goes above 150, it becomes difficult for them to export because they can't make enough money. If they can't make enough money, they have to then get the yen more powerful, which means they intervene, which drops the price of everything against the yen. That's what an intervention is. We're up above that level. So watch this news feed for clues, basically. We were watching it. We've been watching it for the last year or so, haven't we? Waiting for it. And I've called it every time, but I just don't know if they've got the money anymore. So I'm not sure what they're going to do this time. So if in doubt, stay out, basically. UEDA, no special significance seen in the 0.5 interest rate. So basically UEDA saying, I don't think we need to do it, but other members are now thinking they do. So there is pressure there. Putin came out today and held his national address, saying that his special military operation is changing significantly. They are moving towards reaching the goals. They've been doing that for years. Still haven't got there. Not sure he's got any further. Yeah, that's pretty much it for the news this morning. We're ready for talks with Zelensky if he's elected. What do you mean if he's elected? He is elected. We're ready for talks with Zelensky if he's elected. On another planet, isn't he? Anyway, so that's it. Let me just quickly check. I've just got a trade running on the yen. I'm mean reverting the yen on my Top Step account. Just trying to get this over the line, basically. So I thought I'll try a mean reversion on the yen, but since I got in, literally since I got into my trade, yeah, which was on that pullback there, that's exactly where I got in. I was like, oh, this looks like it might be it. We've done that. Literally, since I pressed the button, we've done that. So I'll turn the volume up. We'll listen out for Hogue because I'm either going to be stopping out on those two contracts or adding one. But anyway, I'm hoping it's going to move on the... that's a point. We've got the announcement, haven't we? How does the futures market react on pound announcements? I've never traded a currency on futures. I'll let it run. It's not real money, is it? Probably Powell sounded a little more hawkish and scared the markets. Yeah, I think the markets just got jittery yesterday. No reason to, I don't think, make that move. But we'll see. We've undone most of it on most of them. So I think there's a good chance we might get back to origin on this. Right, so pound, obviously, we've got the news coming out in 10 minutes. So with the pound, obviously, 4.75 is the forecast. We're not going to get anything different to that. If we do, the market's going to go crazy because they are not expecting anything different to that. Powell has said we're not doing anything different. Every news outlet has said we're not doing anything different. If it changes, it's going to be a massive shock, but I think there's a 99.9% chance that ain't happening. So this is what we're interested in. This is the Bank of England board members forecast. So I never remember which order this is. First is how many members voted to increase rates. The second is how many voted to decrease rates, and this is how many voted to keep rates the same. Yep. So what we're looking for is that to come out as forecast. That is what the market will be watching. If there are any positives there, it's going to fly. Yeah. If these two move over to there, it's not going to have much impact because we're expecting the vast majority of the board members, there's always 9, so it's always uneven, to decide that we are not going to change the rates in this round. Yeah. So that is bullish. That is more bearish. Yeah. And that is neutral. So if any of these numbers come out, so if that comes out as a higher number, we'll drop. If that comes out as a higher number, we'll pop. Yeah. So that's what we're looking for. But I don't expect it to be any different, but we will see. Well, obviously the market will tell us. So yeah, we watch that happening and unfolding, which will be shortly. ADRs today, obviously everything's moved. Morning outro. Love the outfit. It's good, isn't it? I bring this one out every year. I've had this jumper for about 3 or 4 years now. It's my Christmas jumper. It's one of those things. You only need to buy one. Once you've got one, that's it. You only roll it out once a year. Smells musty. But yeah. No need to have another one, is there? It's only Christmas. one day of the year. I only wear it one day of the year. This year, I'm going to wear it 2 days, today and Christmas Day. But it always comes off because it's so hot. Right, so ADRs today, it's obvious. It's the yen. So you've got mean reversion opportunities on all yen pairs. I am mean reverting this at the moment via this, doing it the opposite. Yeah, so this is the futures market. The yen has come down. I'm expecting the yen to pop, which is going to be a US dollar yen drop on CFD. So I want that to happen because that's going to make my top step account hit target. So yeah, this yen, I don't know if they are going to mean revert today. So they are all massively extended. I'm not 100% sure what the hell is going on with this yen at the moment, because they've basically said we're not going to change the interest rates. We see inflation rising, which means that we will need to put interest rates up. Typically that is bullish for the currency. Nothing seems to make this yen bullish ever. So whether or not this mean reverts today, very difficult to call. This is the type of trade that I would take with a stop loss only, and I'm basically taking it on here so you can see what I'm doing. Yeah, I'm long at ADR. My stop's above the high, below the low in futures because it's the inverse. But so I'm basically in here short with a stop there, and that's what I'm looking for. And it's the same with all these yen pairs. Yeah, there's a high probability these lot will all unravel. You've got reversal alerts literally going in right now on M5 and M15. Yeah, so this is potentially high of day at 200 ADR on New Zealand yen, US yen, pound yen, euro, Swiss, CAD. Not the pound yen. That one take out of the equation because obviously we've got pound news coming in 7 minutes. So all the others though, very high probability that this is forming a peak formation high. And what we're going to do now is we're going to pull back a percentage of this leg before we start a new leg, or we are just going to do an A-shaped recovery over the next 48 hours. One of those two things is going to happen. You just need to get in and take a part of that move out. So if it does that and that, great, you can take that. If it does that, you can still take that and miss half of it, or you can hold for the home run and assume we're going to go down there. Entirely up to you, but this is the reversal going in at the moment. So all the ends are extended way beyond ADR. You haven't had a reversal alert. So this Swiss yen, for example, 15-minute, there hasn't been a reversal alert today on this since we came out with the news. That is your first reversal alert there. Yeah. So 5 minutes, you may have already had it. No, still not had it on the 5 either. So there hasn't been a reversal alert yet on this. So these are the first ones today, well above 225 ADR. Yeah, so a lot of opportunities on these yens. Don't get into all of them, obviously. Get into one, or maybe two if you want to. But they're all going to do the same thing, because this move is going to be caused by either the yen powering up and undoing a percentage of this move, which is a profit take from the banks on the leg they've just put in, or it's not, and it's just going to pop and continue going. I don't know how impactful what was said today by Oeda is. I don't fully understand the economics of how the Japanese are working now. It's all changed in the last 12 months. So your guess is as good as mine on this. But we do know after a big extended move, elastic band theory, we do get a pullback. So you can see this whole area here on Aussie yen is a propulsion gap. So if you want to take a short here, there's a lovely opposite second monthly high short there. 1, 2, average out. That would be a lovely play short. So if you don't want to use a stop loss, take one here and then scale in the second part there if needed. If that works, great. Yeah, so very loads of plays basically on these today, all these yen pairs. The other extension we've got is the pound US dollar. That is because we've undone that leg from yesterday. Obviously the pound today, who knows? Let me just quickly check something. I just want to make sure I'm flat on my other account. Traded the pound this morning. I banked 400 on that account. Trading the pound reversal this morning. So I just wanted to make sure. I'm just going to reduce risk a little bit on this because I don't know how the end's going to react around that news. So yeah, pound US dollar was extended, and that's obviously mean reverting right now. So your 5 minute, 15 minute has gone in. There's your 5 minute reversal there and retest. So that was your reversal at ADR today. Your 15 minute It's there. Can't see it because it's inside the propulsion gap. It's there. That's not it. I don't know where the reverse alert is on that. It's because we're inside this move. We haven't moved up enough from that leg to get a signal. So you're not going to get one on that. US dollar CAD also extended. Again, this is an ADR hit to the downside. So that would be your long. So it's either going to continue that move or we're going to A-shape recovery on it, in which case you probably would have taken that yesterday. But that was the ADR reversal. We didn't get an alert to go short on it yesterday, so you wouldn't have got in short on an ADR yesterday on that one. And same with the US dollar Swiss. There was no signal to go short. The signal was this morning, but obviously that's during Asia, and there was no ADR this morning. So this is a long. So it really depends what the market wants to do with this US today. Difficult to call. So those are your ADRs. Weeklies, obviously there's loads of them. Everything's moved this week. Monthly wise, we've got loads of movement. Obviously it's getting towards the end of the month, but really tomorrow's your last trading day. There's no trading next week. The banks and institutions are shut, or they're on skeleton staff. The markets will want to scale out of positions today, tomorrow, and be done. That's it. Back on the 6th of January. So today is when we're going to start to get ourselves into a situation where we will go into this mode for the next 2 weeks. Yeah, so that's what you're going to be seeing for the next couple of weeks. Sell the highs, buy the lows, be aware of news. But if there isn't any news, it's just range bound. Yeah, typically that's what we do over Christmas. High spreads, high slippage, horrible trading conditions. It's just not worth it. So take 2 weeks off. So we'll see what happens with this one today, but pound US dollar, obviously I'll watch this because this is going to be our main indicator as to what the pound is doing. Just want to keep an eye on this. What am I up? 187. I'd like this to pop on the pound news, which would be lovely. So basically, to get this account over the line, I'm up, what am I up? 187. So I'm about, I need 1100. So once I get that contract on, I'm actually not going to need that much. By the time I get that contract on, that's 80, that should be target. So yeah, nice little pop on this. Third contract on, bring the average up. That will be a pass. And then I'll work on the other account this afternoon at the open. And then that's it. I'm flat on the yen now. Took profits this morning. Good job. New Zealand yen, that was a lovely move today. But this is just part of this range, look. So we've just been range bound on this for 2 weeks now. So small range, then a slightly larger range. We haven't got anywhere, have we? We're still where we should be. But obviously that New Zealand dollar push completely unraveled. There's the pound Swiss ADR. So there's your pound news just gone in. So pound US dollar coming down. So it's bullish pound. Sorry, pound US dollar coming down. It's bearish pound. 0.3, look. Okay, so we had another member there wanting to reduce the rates. So second number is how many voted to decrease rates. So that is bearish. So we've got more members, well, one more member, 50% more members, because there's only 3 of them in that gang. There was expected to be 2 of them in the gang. We got 3 in the gang that want to drop it to 4.5. So there is pressure for reducing rates building within the Bank of England, but no rate change. So bearish. Let's see what the policy says. No impact on the yen. It's good. Not particularly exciting, is it? This is my only exposure, short pound US dollar. and it's not going anywhere. I'm just waiting for the monetary policy summary to hit, which we don't seem to be having. Just to see if there's anything in there that gives forward guidance, because we haven't got a press conference, but there we go. So we had 3 voting for a 1/4 point cut. Heightened uncertainty in the economy has stopped the cut. We know that. Labour market balance, gradual approach to future interest rate cuts remains right. Avoids commitments. Yeah, pay growth is the problem. So at the moment, we've got pay growth going up, which means inflation will tend to rise, which means, as we know, because it went up by 0.3, we were expecting that to happen. But as long as inflation's going up, we can't drop the interest rates. And if wage growth is going up, inflation will probably go up, which means we can't do that. But it's all very it's a very thin line at the moment. But yeah, nothing exciting in here by the looks of things. So we probably won't get much movement. Watching for evidence of tight supply and weak demand. I don't think we're going to get an awful lot off of it. Boring. Just hoping for some downwards momentum on the euro and the US dollar. Not taking any more trades on account till the new year. No. So yeah, euro. I'm stuck at the moment in odd. Took some loss yesterday on the Aussie US. Took 2 off. Scaled out of a couple last night, 1%. And I took 2 entries here, which were manual ones on the drop on the New Zealand dollar, and basically just to see if we can get, I wanted to get the average a little bit tighter because it was getting a bit too far away. So just looking for some kind of push back up at the moment, but this Australian dollar, New Zealand dollar is just dying. But we'll see. So yeah, I took a little bit of loss on that yesterday. Euro US. Euro odd, I've got short as well. Again, that's Australian dollar. About 200 ADR. So some of these just stuck, basically. We've had this horrible week of nothingness, and then a push on news into 2 weeks of nothingness, and then we're off again. So yeah, can't get any strength in that Australian dollar at the moment. And obviously the New Zealand news hasn't helped at all. So euro coming down nicely though. Just not against New Zealand dollar or the Aussie. Okay, so that's the news candle in 5 minutes. So we'll see if we get continued weakness on this. Traders now favour 3 rate cuts in 2025. Futures point to 47 basis points versus around 45 before the announcement. So basically no change on the forecasts. We're getting 2 rate drops next year. Same as the Fed, basically. We can't drop rates. Inflation is sticky and bouncy. We're stuck, basically. So exactly the same situation as the US. So not bullish, not bearish. We will get pushed around by other things, basically. Let's just have a quick look at the pound futures. So yeah, pound futures down. but recovering again. It's not collapsing in any way, shape, or form, is it? So, there we go. Anybody got anything else they want to look at? Anything else we want to cover? Because I haven't really got anything else to discuss today very much. There's not a lot of point in looking at anything really for setups. Everything's just moving on news at the minute because we've got nothing else that's really going to drive this thing until New Year now. When Trump gets in, obviously stuff is going to change. So the question will be, are we going to get a bullish or bearish US dollar on Trump? Is this going to continue its storm forward? We've got a nice area coming up on the US dollar CAD here. This is the 10-year. Oh no, that's a different line from a different thing. I thought that was the 10-year high, but it's not. But yeah, we have got a nice level coming up as well. So this area here is our COVID high. So that's your COVID high coming up, which is within sort of 4 ADR from where we are on the US CAD. So we are going to find some resistance up there, but it's whether or not we're going to continue this rally. Just not stopping, is it? Got to take a break at some point and make some profit. Would be good to see the more futures trading in the new year. Same as everything else, really. You can do the same. Thanks for the follow, Isabella. Welcome aboard. Thanks for subscribing. Good curly writing. What trading platform do I use? MT4. Everything you there's links going past. There should be. There's not. Where's all my links gone again? I hate it when it does this. For some reason it stops working. Everything you need to know is on the website. There's the free bootcamp course, all my expert advisors, all my indicators I use, strategies I trade, everything's on there basically. Wrong one. So that's a demo account that I'm running a test on a new EA. I'm just testing a trailing stop loss. It's taking trades at random. It worked. Brilliant. There we go. It's taking trades at random, which is why it's made that loss. It's not, this isn't a strategy. This is basically saying, get me in every time there's a candle closed. If I haven't got a trade on, just take a trade in random direction. But I'm just testing trailing stop functionality on it to break even, which it's done, which is great. Perfect. Yeah, so that works. It's good. What was I saying? Can't remember. Anyway, I was saying something. Yeah, futures. So yeah, futures. I mean, it's the same thing. If you want to trade the futures market, just trade the CFD. It's the same thing. Just move down to the 1 minute chart or 5 minute chart or whatever you want to do. I don't see this as trading futures. I see this as gambling. Yeah, on prop. Prop is gambling because they put too many restrictions in place for you to be consistently profitable. Yeah, so this is gambling. If you want to gamble on your CFD account, you can do the same thing. There's no difference between futures and CFDs. The chart here on 6J is the US dollar yen on the 1 minute time frame. Pretty much. Yeah. The NASDAQ on the CFD with your broker is exactly the same as the chart here. That is the same right now. We covered this yesterday, didn't we? Yeah, the candlesticks that are painting right now here are the same candlesticks that are painting here. Yeah. Got a little one, a big one with a tail, a bull, a bull. Yeah, we got a little one, big one with a tail, a bull, a bull. It's exactly the same price action on futures as CFDs. There is no difference. So whether I'm trading on Top Step or whether I'm trading on my own account in CFDs, it's the same thing. press the button. The approach I use on prop is totally different, because I'm just basically pressing buttons with high risk, hoping to get a home run. I don't do that in my account because it's dangerous, but you do in prop because it's not real. So I just need to move back to the yen. God, look at the gaps on this thing. Look. Right. Aussie dollar Swiss can't get any Aussie strength. Nope. So Aussie Swiss basically, I've got a 2 on that. Yeah, we're just stuck at the minute. Aussie's just not getting any strength. Neither is the New Zealand dollar. They're just very weak, the Australasian pairs at the moment. We need a good commodities run, basically. We need oil to rally, ideally. That would help, but it's just not going anywhere at the minute. Swiss franc, obviously, at the moment is very weak as well. So the fact that this has come down against the Swiss franc obviously shows you how weak the Australasian pairs are, because the Swissie's not done very well on the back of its rate drop. Yeah, so we had the big rally off the back of the Swiss franc rate drop, which they didn't tell us about. Pulled back a little bit now, but that's the expected movement on it, which means the Aussie dollar should be able to rally a little bit when the Swiss franc weakens again. But yeah, I've got 2 on that at the moment, but we are holding the lows here at present. So we'll see if it breaks down below that low. We've got basically free fall. It's just nothing until you get all the way back to the end of the Japanese intervention. So this is the yen intervention move. The Swiss franc moves with the yen, so that's the same as the yen. But if we break this low, there's just nothing until there. We're already extended though. They need to pull back on this leg to profit take it. So just waiting for some Swiss, really good Swiss weakness basically. So looking for that, but probably continuation. So want to get out of it fairly quick. But EA's turned off now for new trades for me, so I'll be managing whatever I've got open and just shutting it when it gets into profit, just so I don't have to watch it over Christmas basically. Have you heard of Tradeify? They offer straight to funding models. Yeah, there are loads of them do. Outro, why not use your own capital, right? You know what you're buying. Yeah, if you buy a 50k prop account, you're buying 5,000 liquidity. Okay, so rather than buying that, just put that in your account and trade it. It's the same thing. Yeah, this 50 grand account, actually it's worse. This 50 grand account, I have $3,000 drawdown. Or is it 2,000 end of day? No, it's 2,000 end of day, isn't it? Yeah. I got 2k. Right, so it says 50,000 up there, but I haven't. I got 2k. If I go down 2k, I have to stop because I can't have the account anymore. If you go down 3k, can't have it anymore. 5k, whatever the number is, yeah, whatever the drawdown limit is on the account they're giving you, that's it. So just put that in an account and use it. It's the same thing. If you haven't got it, getting this isn't going to help you get it. What's going to happen is you're going to buy whatever it is, 50 grand, and they're going to say, so these funded models, what's that one called? Tradeify. Haven't even got a website, have they? It's a building company. Traderify Traders. Is that them? No, that's a goods import company. Right, well, if I can't find them by searching on Google, there's your answer. Not interested. Coin flip EA is the future. Yeah, it might be. No, it's not. This is just testing, basically, at the minute. So we know coin flips work sometimes, but they always bring you back to zero in the end. Would be nice. You look brilliant. Wishing you and your family a happy Christmas. And to you, Ryan. Thank you. I might wear this all the time. I really like my hat. It moves around. Oil could help the CAD as well. Yeah. US dollar CAD is a massive beast. Yeah, it's not stopping at the moment at all. Oh, there goes all my links. Look, Streamlabs. Now you decided to put the links in. Thank you. So yeah, I mean, anything basically over Christmas, you just need to be aware that is normally what tends to happen. So don't get too excited. But if you want to trade prop outro, it doesn't matter which one you pick. Literally, they are all the same. They are all basically just giving you a demo account. So you're paying $500 or $100 or whatever for a demo account. They're putting a restriction in place that means you will have a maximum limit to trade with, except you can't use all of that in one go. Yeah. So the best thing to do is to put that in an account and use it. Yeah. To trade with, because you will do a much better job than trading on futures, because at the moment I have very little care whether this explodes or collapses. If it was my own money, I have a lot more care whether this explodes and collapses, because you trade your own money very differently to a demo account. So, you know, it's just if you want to trade futures, top step. Either Top Step or Trade 365. No. I can't find out what it is. Can't remember the other name of the company, but I mean, for futures, if you want to trade futures, you can't really go wrong with Top Step. Top Step have got the best rules. They've got end of day trailing drawdown. They've got really good features. They're cheap. You can't really go wrong with Top Step. They're the best of the bunch, really. Yeah, I mean, there's absolutely nothing wrong with them as far as I'm concerned. But you know, just bear in mind, it's not real. None of it's real. Yeah. If I get funded with one of these accounts, I'm hitting that 10 long and short, and I'm hoping it goes my way. And if it goes my way, I'm taking a big paycheck home. If it doesn't go my way, I'm starting again. That's it. This is why everybody trades so many prop accounts with so many firms, because it literally is just flipping a coin. You can't be consistent when they put rules into place that do not allow you to have drawdown to any extent. So you can't have a losing run, or you trade it with such a tiny amount that so let's say, for example, I get this over the line, this 50k account. I've then got $3,000 to play with each day, or $2,000 to play with each day. If I can make $250 a day, which, let's face it, in futures, it's the open. You press the buy button. If it goes like that at the open for 1 minute, you've passed. You've got your $250 in the bank, haven't you? If you flip a coin with a $250 stop and a $350 take profit, you have just under a 50% chance of that happening. If you do that every day, you'll probably make money, but there's no skill involved in it. You just hit it at the right time. But if you make $250 a day, that's taking home a decent amount. It's $1,250 a week. Yeah, you can live on that. Well, I can't, but some people can live on that. And it could cost you as little as $100 to get it. But when you have a losing run where you get 10 trades go the wrong way and you've drawn down by $2,500, your account is gone and you have to start again from scratch. You'll cross, so then you trade higher, faster, more erratically, which means you blow the evaluation, then you pass the evaluation, and then you blow the funded account, and then you go back round in the circle, and it's a circle of getting you cross. This is why it doesn't work. If you can relax into it, it's great. Like, I couldn't give a monkey's. Yeah, I'm $2,000 to target, $3,000 is the target. This is either going to pass today or it's not. But I'm not going to muck about with it. I'm not going to play with the trades. I'm just going to literally see if that works or not. And if it does work, it's lucky. It's all about luck. But I know I'm not under any illusion that I'm going to keep this account. I've been through prop many times in the live rooms, and it's good fun, but it's not something you can live on. Hey, Santa Claus, Merry Christmas. Thank you very much, Lucas. So for the members, quickly before I disappear, just going to go through the strategies we've got running on forward test. I'm in the process of rebuilding both of these strategies onto a single operation EA. What I mean by that is that you just open one chart, put the EA on it, and it trades every pair from one currency. So I'm in the process of building that at the moment. The trend pullback EA had a bad day yesterday. Absolutely typical. Yesterday, it got out of a lot of the yen longs, or everything that was long on the yen. It stopped out on them just before this. So yeah, took a 2% loss yesterday. So we're down to 4% on the month, basically. We've got 4 open trades, but yeah, it's up 4% on the month. There's some fine tuning to do to the operation of this. The lazy trader strategy is up 4% on the month. We took some drawdown yesterday, so we had to close out part of the Euro New Zealand. Which is not in order, and I couldn't find it yesterday. There. So we had to close out one of those. First entry shut because it rallied. We've got another one there that will be taken today. So this trade will be closing out today as well. So we'll be taking another hit today. So it's starting the drawdown control procedure on Euro New Zealand to get that average closer, so that when we do get the pullback, obviously we'll exit. But that's done 4% this month. It's constantly in somewhere around 3 to 5% of drawdown. That's where it seems to live. But part of that is because of this Euro New Zealand squeeze that we've got going on. The sort of zone trader account, up 8% this month. I've only been trading it 2 weeks though, so 11% drawdown. I expect this to be sitting somewhere in the region of 15 to 20% drawdown constantly, to be honest. So it's actually doing better than I'm anticipating at the minute. But yeah, so took some nice profit today, 1.87%. I've adjusted all the, I just whizzed through the trades. I've adjusted them all today and taken additionals where necessary, or moved the blocks where necessary. I'm going to let that run, that one. Another yen. Need to take another short on the CAD yen. So that's just closed out in profit. So trades on this one, shorted that high, didn't work out. Took a second short at that high, did work out. Flipped long at support. Now got out of the long, need to place second short. Where are we going with this? That's about the best I can get on that, really. So looking for a reaction at those lows there. So when that propulsion gap is filled, I look for a second short. Other than that, I'm looking to get out of my shorts. If we come and retest this area down here. Yeah, so if we do A-shaped recovery this, I'll get out of the short play and I'll flip long again. Swiss yen, second entry taken on that one, so I need a new short. I'm just going to go somewhere up in that area there. Somewhere up there. Highly likely we're going to push down into there though. So what I'm going to do with the long is I'm going to move the long target down there. Because I really want to flip long on this. So what I'm going to do, I'm going to target these highs. It's not a lot of profit, but I actually want to get long on it. So I want to see if we can get a bounce there when they feel this massive propulsion move, if they feel the propulsion move. Euro odd, still in, still in, still in, still in. Short needed on euro yen. So it's that area there. So hit that over and over again after we broke it. Then we slammed through it, retested. So this whole area there is previous resistance turned support. So if we get back up to there, expecting a bounce. If we come down, I'll look to get out in this little supply or demand zone there, which is previous resistance. So look for that movement. Another short needed on the pound odd off the news. Actually, I'm in profit on that one. So let's put another sell just in case. We're at all-time highs here, so the next sell order basically has just got to go more than 3/4 an ADR away. Downside target. So if we're going to get continued weakness in the pound, we're either going to come and hit this area here and bounce, or we're going to come back down to here. Bit tricky. So I'm going to go down there. I'm going to look for a larger move out of this one. So watching this zone down here, basically. So hoping that's the high, and we're going to pull back. So that's the low. So we got a low, high, higher low, higher high. Looking for a higher low to go in. If it's going to bounce, if it's going to reverse, it doesn't matter. It's going to hit my zone and take profit anyway. Pound CAD are still in. Leave that there. Pounds yen, I need another one. Don't think I can take that. I can't. So that one, because the high, we've got that little low there. So we've got this area here, basically, which is the only support I can possibly see that may turn into resistance. That's too close. I can't take one there. If we do push out the top of that and come back down again, fine. Would be nice to have one on there, but there's no reason to get in. So I'm going to leave it all the way up the top there. I'll draw that back in a minute. Pound New Zealand already in. Got 3 shorts on this, so I'm going to target this area now instead. So I'm going to go for a smaller target because I'm wrong on this for 3 now. So if we can get down to there, I'll look, see if we can get a bounce out. So market structure, that is potentially what's going to happen. So I'll take off my shorts there, flip long. If it continues to push down, second short will go in, second long will go in down there. Everything else is all good. So yeah, so up 8% in the last 2 weeks. Going very well. There we go. Your ADR is fantastic. Thank you very much. Not my ADR. I didn't invent ADR. It's ATR basically on a daily time frame. That's all it is. It's nothing particularly exciting. But yes, it is fantastic. And if you're not using it, you're stuffed basically, because as the average daily range of instruments changes, if you're not changing with it, you're going to be in trouble. Good morning, Michael even. Going to have to head off in a minute. All the best for the holidays. See you in the new year. Goodbye, outro. You may have already gone because I don't know when you typed that. But yeah. So members in here. Member streams next year. I really don't know what to do with them. I'm having a bit of a quandary. I've been thinking about this over the last week, really. So all the members streams that we're doing, everything we've covered for the last 2 months basically is pretty much everything that I think everybody needs to know in detail. So I'm running out of things. I've got loads of things that I could say in streams, but I don't want to put together streams for the sake of putting together streams. I want to put together streams that you want information on. And if it's the case of you'd like to spend an hour just scalping the markets, or watching price action and me commenting on what I think is going on, or trading futures, or whatever, or trading prop, or whatever, you know, it's just I need to know really what to cover, because we've covered everything that I think everybody needs to know. Obviously, strategy development, I'd like to keep one stream a week free for strategy development to look into new strategies and try and build the portfolio of diversification on more strategies. So as I find and develop new strategies and EAs and for back testing, those things we can certainly cover, and obviously you can help me test those. But as far as educational content goes, I haven't really got anything else to say much, because I've covered it all. And if it's not in here, you don't need to know it. I've been through my list of other streams to do, and I've covered half of the stuff already in here, and the rest of it is kind of another reworking of everything I've already covered as well. A couple of members have asked me to go through the Bootcamp again and do a live version of the Bootcamp, which is obviously, since I recorded that however many years ago, nothing much has changed, but there are certain things that have changed. So some people have said, why don't you go through the Bootcamp again and deliver the whole Bootcamp again, week by week, lesson by lesson, which I can do. But what I don't want to do is just continuously repeat it for the case of repeating it, because you basically could go and watch the Bootcamp. David, afternoon. Good morning even. Good morning, Santa. I mean goat. I can be both if you want. Very hopeful. This is the turning point for pound odd and pound cad. Probably is. So yeah, we'll have a look at that in a sec. So yeah, basically, let me know what you want to cover in the member streams. Use the Discord channel to let me know, because I'm running out of things to do in the member streams apart from strategy development, and it's not particularly interesting for you to sit here and watch me do that side of things, because most of what I'm doing is tweaking existing EAs to try and improve them and test different strategies out. And that's not something I can really do on stream, because it would be boring as hell. Watching the results and going through the results is interesting. I should teach how to code an EA. I don't want to do that. There's other people that do that. If you want to learn to code an EA, you can do that. But I'm not going into coding. It's not a simple thing. You can't deliver a coding course ad hoc, I don't think. You've got to go through what an array is, what a variable is, what a global variable is, what a function is, what an init is. What, you know, you've got to know a certain number of building blocks before anything else makes sense. And if somebody's missed the first week of the building blocks, they can't do the rest of the course. And if they need to catch up, they're never going to catch up. Yeah, there's Udemy courses out there that will teach you how to do it. Just use that. There's no point in, I don't want to go into coding either, because it's one of those things, coding, that will annoy people, because there's a billion ways to achieve the same thing. And if you do know anything about coding, you'll know this. If you go onto any forum and answer a question or ask a question, you'll have 10 people who will all argue about the answer. That's what coders do. So you'll say, what's the best way to do this? And someone will give an answer, and then the next person will go, but that's rubbish because blah, 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 blah. And then the person that asked the question gets 2 answers to do the same thing in 2 different ways. Because there isn't a right way to write a book. There's not the right way to trade. It's the same thing. So I don't want to do anti-coding. Trading, strategy, that sort of stuff, I want to do more of. That's what I do all day long, you know. But this thing is, I can't sit here, you know. The only thing I can think of doing regularly in the member streams is sitting on the 5-minute time frame and trying to make money out of 5-minute time frame. But we'll sit here for an hour, like the yen trade. I've got this yen trade on, right? I've been in this yen trade now since here, 9 o'clock this morning. We're now at 12 o'clock. If we'd have been sitting in a live stream, I'd have been saying, oh, it's gone down, oh, it's gone up, oh, it's gone down, it's gone up, it's gone down, gone up, gone down, gone up, gone down. Wait, we're in profit, oh, we've gone into drawdown. Oh, we're back in profit again. That's literally the stream, and it's taken 3 hours to go nowhere. You can't stream this, can you? Let me quickly look at what David wanted. Pound odd and pound cad. Yeah, so it is. The reversal is literally just going in now. So obviously the news that we've just had is slightly bearish, because we've had the numbers coming out as one more rate decrease. One more vote for a rate decrease. So obviously the market's reacted negatively to that. It's not bullish, the pound, at all. It's not particularly bearish either. So both of these, we're just looking for them to unwind legs, basically. So the problem you've got with the pound is it's been like that, basically. And there's no reason it should continue. Tom, Merry Christmas. Thanks for another great year. 79 Australian dollars. Thank you very much, Tom. That's very much appreciated. What is 79 Australian dollars? I should know that, shouldn't I? Enjoy the time off with your family. I will. Thank you very much. That's a very, very generous tip. Thank you for that. Pound odd 2. So it's about £35-ish. Thank you very much. That is much appreciated. David, I think he may be overtaking you. He's not. Don't worry. Sorry, let me go back to the analysis. Thank you for that, Tom. Very much appreciated. That will pay for some of Christmas. Probably the pudding. God, food's so expensive this year. You don't notice when you do Christmas shop. Yeah, Christmas shop. One of my mates said to me, I went out and did my Christmas shop the other day. Do you know what? My Christmas shop was 450 this year. Last year it was 300. That's how you tell what's going on with inflation. His shop is nearly 50% more expensive this year than it was last year. Nuts. Anyway, sorry to moan about inflation. It's the only thing we watch all day and long here, isn't it? But yeah, it looks like a reversal is underway. Whether we get a reversal or we just get a pullback, we'll have to wait and see. So we're in an that's a really crap drawing, but we're in an expanding wedge pattern at the moment. I'll just draw it with lines. It's easier. Yeah, we're in an expanding wedge at the moment. Oh my God. Drawing. Depending how you look at it. So we are in, volatility is increasing, which potentially means your higher low is going to go in somewhere down here. If it's going to be a higher low, if this is a reversal, market structure is going to shift back down into this area here. So you've got a long way to go. Same with both of these, the pound odd and the pound cad. We've had weakness on the Australian dollar and the Canadian dollar. And we've had mediocre strength on the pound. Yeah, so both doing exactly the same thing. If you look at them, they're both very much the same trade, look, because the Aussie and the CAD have both been dropping at the same rate. So there you go. David, thank you. Another just can't be outmatched by Tom. Thank you for the $10, David. And Tom, 159. Wow. Thank you, Tom. That's very much appreciated. Are you a member? You are a member, aren't you? I think I can't see now because you've got I can't see your name apart from tips. But thank you very much for that. That's very much appreciated. That's made my Christmas. That's made my Christmas stream, definitely. That's very, I'm going to give that one a thumbs up. Thank you for that. Much appreciated. You're not a member, David. You need to become a member. And neither is Tom. Tom, you should have spent £35 of that and become a member. And then you can get all the members' content and you can be in the member streams in January as well. But unfortunately, I can't gift them. Otherwise, I would gift you one. But thank you for that. That's very much appreciated. That is my biggest tip I've ever had. I don't get many tips because obviously there's not too many people in the stream most of the time. But that is very much appreciated. Thank you for that. Let me just quickly get back on the chat because somebody's asked questions. Not sure if there's a session about the creation of good backtest data, especially because of the broker time zones versus backtest data. So how you proof broker time and create the backtest data. Well, I've covered that, Lucas, already back here. If you go back to the very first week of streaming, it was this, which is strategy development, backtesting basics. Yeah. Quant analyzer essentials, robustness testing, strategies for prop firms we covered, and exit strategies. So this was all to do with strategy development and backtesting. So with backtesting specifically, I use Tick Data Suite. So very simply, this data from Dukascopy or wherever you want, whichever broker you want to get it from, you just need to match it up to your chart. So the best way to do it, 90% of brokers like mine here with RoboForex are GMT +2 or UTC +2, which means that the candles when they close are 2 hours ahead of my time. So this is the 1240, it's 1244 now. This candle here is 1400. It'd be better if I did it on a 15-minute time frame. This candle here is 1430, so it's 1445 candle is about to close, which is 2 hours ahead. So that's basically how you tell. So that's how you do the zone, and then all you do is you run a back test with this data, yeah, in the strategy tester in visual mode like this, and use today's date as the ending date. Let me just run it, just so we get something visual, yeah. What am I running here? Opening range breakout. So you run that, you stop the chart, and then you look at this day from here to there, for example, right? And you open up the same chart and the same time on your broker. So you get this side by side with your broker. When is this? January 2024. So 3rd of January 2024. So if you go back on the 5-minute time frame to the 3rd of January 2004 on your broker, if this candlestick pattern here matches your broker's exactly, you know your data is exactly the same as your broker. That's it. That's all you do. But never trust your broker's downloaded data. It's usually absolute rubbish. I would be interested in developing an EA strat to rinse prop firms. We've got loads of them, Harold. Opening range breakout. Stock index hedge. You got buttons here. Use them. Or ADR reversals. Yeah. You got an ADR reversal short there. Take that short, that market reversal alert with a $500 risk. Yeah. And take a 3R on it. You just made $1,000. If your target's 3K, you're a third of the way to target on one trade. That's literally all it is. We did that in the member stream. Look, strategies for trading with prop firms. If you've got any ideas, so again, there you go. That video. So I'm just scrolling back through the chat now. Whoa, it's gone too fast. Afternoon, Dallas. He made a right mug of you, David. No, he didn't. Don't be nasty, Harold. Tom, I made that tonight using SIH, so who cares? I've made a hell of a lot more than that. Brilliant. That's what we like to hear. Tip, race 3, horse number 7. Which meeting though? Yeah, good to hear. Actually, I haven't covered the SIH today. Rubbish today. Rubbish yesterday as well. Glad I got out of the trades yesterday before the news because everything collapsed massively yesterday. NASDAQ, boom. Yeah, you have to be out of everything when that happens. Yeah, it's just not an option. But today, double hedge today. It's going nowhere. This is my last day attempting to trade the indices as well. This week's been terrible. I'm down this week, so not interested anymore. That's it. I'll be coming back 6th of January. I probably might actually give it the first week for the market to wake up, because when we first come back, it tends to be a bit volatile as well. So, David, right, Tom, I've made a lot thanks to Lee. He deserves a cut of my earnings. Yeah, that'd be good, wouldn't it? That would be really interesting experiment. I've thought about doing that, about setting up a PAM where people would be able to copy trade my account, but I do not want to be responsible for other people's capital. Plus, I think you have to be registered and licensed to do it, which obviously I'm not. So, yeah, but it'd be interesting. One of the things I've got planned for next year is to set up signals for the new strategies on the marketplace as well, just to keep track of them. So all the new ones that we've got in forward test, which are going live, to have those set up as signals so that people can copy them. But the reason I don't bother with signals, most of the people that sell signals on MQL5 are selling the signals because they know they've got a strategy that's not going to work long term. So they just want to make money out of it short term. But most of them have got signals set up just to basically prove their EA's profitability over a short period of time. And then it blows and then they set it up again. So I kind of like to set specifically these two strategies up with a signal, not to be copied, but just to prove concept of the EAs. You're better off buying the EA for whatever, it's a one-off purchase, and not paying for a signal month after month. Because signals, obviously, you have latency issues, you have different spread issues, there's all sorts of issues with signals, which just mean signal following is pointless. It just doesn't work. So you're better off buying the EA and trading with the EA yourself on your own VPS, which is why I don't bother with signals. And also, there's too many variables, there's too many ways to use them, isn't there? I got out at 1R today on both. Figures it was going to hedge. You got 1R, did you? Oh, right, on DAX, yes. So DAX broke down to 1R and then popped, hedged, dropped, up, down, 3R. I was really tempted to take it off at the pre-market lows, but I didn't. Should have done. We got 2R on the FTSE. That dropped 1R as well. Stick that in the back tester. I did a set file testing 1R. The problem with it is, in the back tester it looks really good, but in real world you've got spread. It doesn't work 1R. It comes out as a negative, a break even basically. So yeah, unfortunately, 2R plus is really the only way to make consistent money. But obviously, when the market's not very liquid, 1R is where you want to be. But if you knew it was going to be liquid, you would use the right risk reward, wouldn't you? Well, we don't. This is going nowhere. I'm just going to cut this. So risk is now $100. I'm just going to cut this because it's not working. Highly unlikely to going anywhere before the open. So, right. CAD yen 225. Yen still going. Well, the CAD is still going. Bit of strength coming through on the Canadian dollar. All these yens still holding up a little bit. Look. That's why we're not going anywhere. That's the equivalent of what I've just taken in futures. I got in here. You can see where I got in, yeah? See what I mean about futures being the same as CFDs? Yeah. That there, or rather that there, is where I entered. That big strong push, pullback, my entry. Big strong push, there, pullback, entry. Yeah, it's just the inverse of that. Same thing. Good morning, good afternoon, Guna. Haven't seen you for a while. Happy holidays. Yep. Happy Silly Hat Day. I hope everybody's got their silly hats on. Right. I haven't really got anything else to cover today, so that's pretty much it for this year. I'll be back on the 6th of January with obviously new streams. So just stay as flat as you can. Take this time off. If you haven't traded through Christmas before, it's awful. It's very illiquid. It's very slippy. And the market generally doesn't tend to do a lot. So range trading, good. But to be honest, it's just better to stick clear of it over the Christmas period. We do sometimes get very big moves because there is no liquidity in the market, and if large orders are placed, it will slip a lot. So ADRs will be all over the place. For the first week back in January, the ADR numbers will be shot because the market will suddenly come to life, and it'll be hitting ADRs constantly for the first week in January because we've had that sort of volume, or we've had ridiculous moves and then we're contracting again. So it's all going to be shot the first week of January. So ADR reversals, be careful of, but just steer clear of as much as you can over the Christmas period. Do not get tempted. I've tried to trade it many times on many time frames, and you just end up hemorrhaging money. So come back when the markets are back, because the banks aren't there, so you shouldn't be either. Dallas, enjoy your break. Spend time with the family. Will do. And I'll also be developing stuff, unfortunately. I can't stay away from programming and testing, but I will as much as possible. I've got lots of days out planned to get me away from the computer. But yeah, I'll be back in January on the 6th. So if you want to join the member streams, we've got new member streams which will be planned. I'm going to be planning those a little bit over the holidays, and I'll be asking members in the current stream in Discord for ideas as well for stuff that we can cover, because we've only got 2 streams a week, so I want to use them properly. So all right, so anything you need, let me know in Discord. I will be around on Discord all over the Christmas break. Just be aware we've got more news coming out as well. We got this news this afternoon and tomorrow, but after tomorrow, going into next week, obviously, there's nothing happening. And then the week after, nothing happens because it's bank holidays for New Year. And then the 6th of January, that's when the banks get back to normal, basically. So we got full 2 weeks of absolute nothing. Enjoy. All right. Would you consider 2024 a successful year? Yeah. Difficult to quantify, really. Profitability, terrible. I was profitable, but nowhere near my normal. I normally do 6 figures. I didn't. So no, not this year. It's successful in the fact that I haven't lost money, but it's not successful as normal. Put it this way: had 2 really nice, expensive holidays abroad this year. I won't be having them next year. Wife's not very happy about that one. So yeah, no, nowhere near as good. Luxuries won't be as forthcoming in 2025, but hopefully with the diversification I'm putting in, it will be next year. So going to be doing things a bit different next year, because it looks like we're not changing the interest rate. So I think next year is going to be very similar to this year from a movement perspective. However, we've got Trump. Who knows? Could be anywhere, couldn't it? But yeah. All right, so have a good Christmas break, everybody, and I'll be back on the 6th of January. If you need anything, I'll be in Discord. Other than that, enjoy. Have a good one.